IRS's notoriously complex treatment of superannuation, Australian superannuation. And companies here, if you're an employee, they have to open up a super fund for you, correct? By law.
Superannuation's mandatory.
So you can't even say, don't open one for me, I'm a US citizen, you know. So what should people be aware of before they become a US resident, become a resident of Australia and leave the United States? I mean, what should they be aware of?
Well, that's one of the big ones is that you just mentioned with regards to superannuation. And, you know, people, you don't have a choice. Like in the US, you have a choice about whether you participate in a 401k.
Yep.
It's always voluntary.
Yeah.
A lot of people do it because it's quite advantageous for you from a retirement point of view. You also get employer matching for 401k in the US. Mm-hmm. And so people might look at that and say, yeah, okay, I understand the superannuation, but they might come out here and think, well, I have my 401k in the US, I've got my IRA in the US, I don't want another retirement plan in another country if I'm only going to be here, let's say, for a few years. I'd prefer not to. So number one, you don't have a choice on that. There is going to be, if you're living, working here, and you know, the biggest question here is you're here as a local, because I don't want to get into things like if you're being paid from a U.S. company and there might be some agreements that can help on that. But if we keep it simple and you're here and there's no exemption from super, which generally there won't be, then the employer must contribute into a superannuation fund for you here in Australia. And so then you look at that and say, right, how is that going to be treated for U.S. tax purposes? And unfortunately, the answer is not, well, that's a qualified retirement plan, and just like the 401k, that contribution doesn't get taxed in the U.S. and no reporting required. Not true. The employer contributions, in our opinion, are taxable. And in many cases, even the value of the super fund from year to year, the increase in that value must be reported as well in the U.S. return. Doesn't always, and as a matter of fact, many times doesn't generate additional tax in the U.S., but we want to make sure to get that into your return as reportable income.
And aren't there grantor trusts that require forms? And so explain to our audience what a grantor trust is.
So a grantor trust, and the word grantor is a U.S. term only, so you won't see that in other parts of the world. And it basically is focusing on the individual or entity that is putting in the contributions or forming that particular trust. And you look at that and say, how does that apply to superannuation funds in Australia? Now, the vast majority, and again, you don't find U.S. legislation on this, so this is interpreting the legislation and going specifically from there. We would say the vast majority of individuals who are salaried employees, they work for the organization says, okay, we're going to put in the money into the superannuation fund. We would look at that and say that is not a grantor trust. It's a foreign trust, but not grantor, because the employer is basically funding that trust, and we would call it what we call an employee benefit trust instead. Biggest difference is that when you have an employee benefit trust, the forms that people associate with foreign grantor trusts, there's a form 3520 and a form 3520-A, very complicated forms, but we would say those forms are not required to be prepared when there's an employee benefit trust in place. And
okay, but what if I'm not familiar with the Australian retirement system, superannuation system. I've only just got back here. Do Australians put money into that account too?
That's one of the hallmarks of Australia, which is, again, a lot different than the 401k in the US, is the ability for an individual to just reach into their metaphorical pocket, take out some money and say, I want to put this in my superannuation fund. And they either do it as through their employer, through a concessional contribution, or if they're not an employee, then they can make a concessional contribution, meaning deductible. They're not having paid tax on that in Australia, or as a non-concessional contribution, where you've got a lot more latitude on the amount you can put in per year. The issue there becomes, now you've made individual contributions, especially if we're dealing with those non-concessional contributions. Right. And then you've got to look and say, do we still have an employee benefit trust? or do we have a grantor trust? And those are some of the conversations we are having all the time.